Hi everyone, I'm finally getting down to answering the AMA or the Ask Me Anything Twitter feed, and let's get right down to it. So a lot of questions coming in over this weekend and much more than last time. The first one here, Vasant Shukla, the dollar index and US bond yield are not having the same impact as they used to have earlier. Nifty at 24 times trailing and 21 forward earnings seems high. What should be the fair value based on fundamentals with several state elections looming? A lot of things mixed up in this. I'm not sure state elections have any bearing on valuation, but is 21 times expensive or 24 times expensive? Now, if you look at a historical chart of the P ratio of the index, you'll find that the top end of the range can go well above 30. Okay, so every major bubble peak, or even if you go into 2021 before it topped out at 18,600 the first time, we had sort of crossed that number, and then the number kept coming down because earnings have been growing. So this is important to understand. And at the bottom end of the range, at COVID's bottom, we were at like 17 something, and this time around in 2022 June or in March of this year, we've come close to 18, 19, 22 something. So in that sense, you're at the similar, this is the range now. And now if you look at the range from a 17 to 35 kind of thing, and say you're at 21 or 22, it may not really appear that much. Coming to the dollar and bond yields, basically they have not done much actually. US bond yields have been in a falling channel range. So let's take a look at that chart. Okay, I have both the dollar and bond yields on this. First, we look at the bond yield. It's been in this falling channel. It's trying to break out, but it hasn't really done so. I am sensing it may or may not, in fact, may not more often than may, because it'll be driven more by slowing inflation than by strong GDP growth. So let's see, now people are beginning to decide that, well, inflation in the second half will again pick up and all that. Let's go through that cycle, because right now it's still in declining phase. By the time it picks up, will be after September, get reported by October, November. And by the time decisions on any rate hike are taken, it will be November, December. I'm just thinking aloud. I don't know. But basically, let's get to a point where numbers change. Too much guesswork has happened on this subject in the last 2 years. And so let's not do guesswork. And similarly on the dollar index, it has peaked here. This is most probably the top. And we are going through a bear market. Now, is it over? It's too early to feel over. Either this is B or this is B, and then we start down from here. We're trying different options on the wave count. But my sense is it should head lower. Now, but it's been in this range, right, for such a long time. Just like we saw in bond yields, we've been in this tight range. That's why this is having less of an impact. Things move in a particular direction for a few days and then they stop moving. So not really much we can do about that. But once you do get a clear, trend in either the dollar or the bond yields, they will have an impact. Options buying versus options selling for consistent minimum outcome of compounding the 10 lakhs of capital, for example. Now really comes down to, see, you haven't put in what rate of compounding. You haven't put in what risk you're taking with this 10 lakhs. What kind of volatility do you want to really build into your portfolio? So if you're really looking at, well, this is my 10 lakhs, I want to earn 2% every month. Can I do that through option selling? The answer is yes. It's possible with a well-executed strategy. And we will deploy the margin. The risk could be that probably in 1 month you'll lose 2% or 4%. And then again, but they should be, in a good strategy, you'll get 8 months that are winning, 4 months that are losing, and net you'll still make a good percentage return on that if you have it right. And having it right means getting both trend right, and then the execution right in terms of selling out of the money options, and correctly managing risk around it. So that's about as simple as that. There are many strategies around selling. I'm a pure directional guy, so if I feel I'm bullish, I'll just sell puts. Not something I do, but I'm just saying that is the strategy I would explain, if at all I would. But there are more complex ones people do. Buying and selling, on both sides, calls, puts and all, more complex. I find that, in my mind, simply increasing risk, because if it's a viewless strategy, then you have to manage both sides of the pairs. If you have a view-based strategy, at least you're only managing one side. And to me, somewhere that is slightly easier. Because after all, it's a time question, not a price question. Even if the trend, you're expecting an uptrend, indicators are set up that way, and it doesn't fall, it doesn't rise, but it doesn't fall, you still earn premium. So if that is the case, then why open risks on both sides of the equation? That's just my thought. Now, of course, if you're looking for higher volatility and higher returns, you don't want that 20-30% per annum. You're like, I want to double my money and so on. Then you'll have to switch to being an options buyer, but it comes with its own risks, which means drawdowns are higher, returns are higher, and drawdowns are higher. See, risk and reward will always be correlated. You cannot get uncorrelated risk with return. Okay, so you cannot expect your return, the options I buy, and they can go 2x, 3x in a month sometimes if you're right. Yes, but when you go wrong, you can lose premium, and so the volatility of a book that you're running really shoots up when you're a buyer. But so do the returns if you can do it correctly. So that choice has to be made based on what your risk return profile is. Rohit, is this wave 1 of 3 and how much can wave 2 really retrace? So so this is a question I kept getting throughout the COVID rally, because that rally was one way and there were no deep retracements. And what happens is when you don't get deep retracements, it is by itself signature that you are in a strong market. So this whole expectation of how much can 2 retrace, root 2 can retrace 38%, 50%, 61%. Now, textbook theory is yes, wave 2s are the ones that tend to have the deepest retracement on a medium term degree, when you have a larger trend in force. And even short term, like the first COVID rally did retrace, I think up to a 50% retracement in the minor degree when it moved from 7,500 to 8,000 something, 800 maybe. It did pull back a bit and retrace 50% and then continued higher. But all the subsequent pullbacks, of a larger 5 wave and then a ABC correction, like which happened in, I think, May of 2020 and then in September of 2020, those were not deep. They probably didn't do more than 38%, okay, or a little more than 38%. And so that signature of great strength. So I think rather than think, oh, how much will it fall? Start thinking, oh, if it didn't fall less, what does it mean? I think get that thinking also in your process. Both are possible. What clues are various global charts across asset classes giving about the next pocket of turbulence, blah, blah, blah? They're not giving any clue of turbulence. I mean, if there's something right now which is not moving as per expectation, okay. I would have thought that this whole bull run that we are seeing in equities would have been driven by falling interest rates and a falling dollar. But apparently that is not what happened. You have equities doing well, but you don't have a falling dollar or falling bond yields as of now in a big way. And that remains the risk on table. But simultaneously, what that means also is people say, oh, does that mean we have a tight liquidity situation? So far for the last 6 months, somehow liquidity has moved along with equity on the way up, which means the Fed has directly or indirectly through some means provided that liquidity. People are still eyeing the tightening of, borrowing by the US government leading to TG account refilling and all those other issues which they were raising last month, still on the table, thinking somewhere it will tighten conditions. So I'll take it step by step, let it start happening and then we take the clues. If I look at just the charts, I cannot really see a significant pullback. You can easily get a small retracement, but nothing that will bring hell loose right now is visible. So I don't know, but these are the factors. I mean, if the dollar starts rallying higher, at some point it becomes a concern, or bond yields break out above 4%. Yes, it becomes a concern, but we are at the breakout point at 3.8. So let's see the next few days whether that breakout happens. And if we look at Indian bond yields and the currency, yields have already fallen. In the short term, they have been bouncing back, but they've fallen from peak, and the USD-INR also made a lower low yesterday. So we're still watching. So these two patterns are not really reflecting risk as of now. Per you, Nifty is in 5 of 3. So next will be 4 down. It's 5 of, 3. It's like it's not. It's a changing wave count, first of all. And second, it will just be 1 inside that 3. It's not the end of 3. I mean, if you say that 2020 to 21 is wave 1, which is from 7,500 to 18,800, which is more than a doubling of the index. And here we are from 16,800 at 19,000, barely 10, 15, 20% maybe up. In a 20% move, I wouldn't call it the end of wave 3. So that's too premature to really say that. So you'll just get subdivisions. Sure, when that subdivision happens, you'll get that 38% retracement, maybe at least of the rise. You won't get the same kind of pullback you saw, say from 15,200, it went to 18,800, and then it retraced maybe 50% of that. That kind of thing is not happening again, unless the world is coming to an end. What is the market trend? How long is it present bull run likely to continue, at least for the rest of this year? And by that time, we should be able to judge whether it's also going to continue into 2024. I do think so. But let's take that judgment, because various global factors, as we discussed early on, people have asked, are still a risk here. Sir, your forecast for 35,000 to 3 years, can you please forecast levels for Nifty, mid cap, Nifty, small cap? So the reason you're not doing it is sometimes each index behaves differently. You don't know whether one will underperform or outperform, or narrow down in a certain point of time, after a major run in one segment. But I do think mid caps and small caps are going to be the place to be. So what I was referring to really is this phase, so back in 2005-6 here, after this, from this point onwards, mid caps were relatively underperforming the Nifty. And then they went through a lot of gyrations, even though they're going up. And so this was a phase where Nifty was outperforming the mid caps. And then here again, mid caps were outperforming Nifty. So you go through phases. So if I look at this phase, this is a phase where basically mid caps were flat against, and now they're actually going through the roof. But I don't think we are not in this kind of a small legged phase. This is going to be much bigger. Okay. Now, if I had to still, if somebody says no, put a number, I would just do the simplest thing is I would say, okay, what if we get a equally sized move than what we got before from this bottom? In which case, the Nifty mid cap would end up at 75,000 or something. Right now, it's at what? 35,000. So that's still a doubling from here in terms of the mid cap index. Now, is such a move really possible? The history shows it happens, but sometimes kya hota hai? Moves get smaller. So if I did the same thing over here, it was eventually achieved. But if I look at the internal moves, this one is actually smaller than the first one. And the next one here is even smaller than this. So each leg got smaller. So right now we don't know how that will happen. Like what if this leg is not this big? It's actually smaller and then even smaller. What if it does something like this, which it did here? So these are things we don't know. We can very easily get carried away by making projections. But one thing I can tell you, based on the relative strength chart, which is more important than really thinking about what is the exact level of the mid cap, is that when you get these cycles, they last for 1 to 2 years, 2 years mostly if you go by history. And for 2 years, you get outperformance. So this is the RS or ratio of mid cap to Nifty. It was flat for this entire period. Now it is breaking out, which means I wouldn't be surprised if this ratio simply moves up to the top end of this range, the trend line of these eyes goes up here. So from here to here, mid caps are outperforming the Nifty. Long way to go. What the level ends up being, that we'll see. Okay, so is it right time for a person who has been waiting for a correction to enter the market now? If yes, how should one strategize and in which sectors? The sectors will not change. Strategy is always to chase performance. So look at what has worked in the last 1-2 months and rank it out. But definitely it always, if you miss out, I have a strategy of discipline, and if you start using strike, you can actually start onboarding yourself to the strategies that we teach and explain, which is like using the RMI and deciding that, you really want to play the next cycle, which means, of course, you've missed out this move. Now I need to wait for the next buy signal, and next buy signal cannot come at this level or at this market price. It will come after a pullback for sure. Size of pullback unknown, something that you'll have to, track my work to understand if you want an input on a day-to-day basis on when the Nifty has reached a point where it will move up again from, because these are answers we search for every day. It's not something that, you have upfront. And the second is I use the Rohit setup where I have the RMI indicator. This sort of helps me sit through the discipline of a cycle. When we think of cycles, what we think of is when it gives the buy, it goes up, comes down, and then returns this. So this to me is like a sine wave. These are sine waves in progress. When is the cycle complete, not complete, and where should we really resume the next move higher is something that it helps you to think about and gives you the discipline to say, fine, this is moved, now I wait for the next turn, because the bull market is not over. And if you need to enter, you need to do it in a disciplined way, for sure. For that, you need a methodology. And for me, that methodology is the RMI indicator. Looking at it, when you get that pullback, when the cycles are done, you'll need to learn that from us and be able to execute that strategy. And that is how it will work for you. So that's my best answer. I cannot tell you exactly buy when it will reach 16. In any case, we are not going to say buy and sell because we are not in the advisory field, but I can give you indications. I can tell you my Nifty view, which helps in building on that strategy of when to make the entry. So do start reading my work daily to get an insight, and weekly. If you're a longer term investor, look at the weekly setups, which I write on every Sunday, and in the long short report once in a month or two. Around what approximate levels Nifty could top out and minimum retracement? So it's a similar question. There are too many people even in the spaces who wanted to know when the market will top out and fall. Now surely we are getting a short-term pullback. See, if you look at the last 2 days, and if you saw my YouTube short that I put out in the morning, and I've put it on Twitter, that okay, you get an hourly overbought signal. Now hourly overbought simply means that we have a high RSI on the Nifty in the hourly chart, right? If I go to a 1 hour chart and I plot the RSI indicator, relative strength index, and you find that, oh, here it had reached 89.90. Even here, when the market made a higher high midday today at around 1 o'clock, the RSI made slightly lower high. So that's sort of a negative divergence. That is sort of starting a corrective phase, right? So, but if I'm starting a corrective phase, the question is how much? So I would minimum expect, okay, it can come back here to the averages. I mentioned the 40, 50 day R averages. So this is at around 19,100, 200. We'll be lucky if it pulls back that much. But the funny thing about averages is they can keep rising. And eventually when it pulls, it's only here. So we don't know. These are moving data points. Next thing will be at 19,250 and you may not go below that. So it may be as small as this and then go up. And people are hoping something like this, which may or may not happen. So I'm not counting on anything big happening, because rotation is ensuring that it doesn't. And also participation by some large caps, like we saw recently, Reliance taking the lead, and they've announced that new thing, new phone yesterday, which has probably got some enthusiasm. That stock's been flat for almost 2 years, not advising anybody to buy or sell, but it is attempting to break out of a falling channel. Now say, for example, it does break out of that channel. That's the real question here. Can it really break out? And if it does, okay, this is a major heavyweight. So you're seeing in fact recently even HDFC was being troubled with its merger, and then suddenly it started to perform. Today you have a Bajaj Finance moving up 7%. Now here you have Reliance Industries trying to break out of this channel. Okay, the top end is around 2,666 or 2,660. And if you close above that and break out, then what does it indicate in terms of, coming out of a long flag to, over a year kind of phase when it was not performing, and it starts to perform. So then it's a major index weight, right? So the question is, how do you get an index correction when rotation from one to the next thing starts participating? So that's going to be slightly difficult, which is why I'm not working around anticipating any big pullbacks. And so that's that. Any repeat questions on that, I will point you to just listen to this again. Around this approximately what Nifty will, okay. Thanks for the opportunity. 5-7 years investment time frame. What to expect mid and small cap outperform? Yes, I expect mid and small caps to outperform. I think, but there are cycles. They usually do so for around 2-3 years. Then large caps do well and so on. But then by the time mid caps peak out, then typically even markets sometimes peak out. 2020 was the only time pre-COVID when 18 to 20 where Nifty was holding on and large caps were holding on even while mid caps were falling. But that's very, very rare and not always the case. So there'll be a good 2-3 year cycle at least. I don't know about 5-7 year. We'll take that judgment call by the end of 2024 sometime as to whether it can extend in time even further. But yes, for the time being, mid caps and small caps outperform. With sectors, I think I've mentioned them in my various CNBC interviews. Sectors that are doing well. What is doing well over the last year, last quarter? You've seen performance on autos, banking, capital goods, defense. That's 4 sectors right there. Power has lagged behind, but I think on a 2-year basis, they've done really well. So eventually, I think power also does well. I hope that metals do well because they did really well in 2020 against expectations. A lot of people have become pessimistic on that sector. But can you really have a growth cycle without the commodities participate? So if everything else does well, eventually you'll get that segment as well. But the ones that are leading are always the best. So if you want to go by the leaders of the cycle, I mentioned the 4 sectors that are very clearly outperforming right now. And you would like to look at them. In the mid caps, you also have some manufacturing related companies that have been in the limelight. So that is interesting. In pharma, it's not so great, except for I think hospital stocks or some very individual mid caps that are getting orders from the US or something like that would be good in generics. But otherwise, in general, they underperform in these phases. The FMCG pharma stocks, which have done very well in the last decade, may probably do less well relative to others. That's about all I think about the sectors. Monthly chart analysis of Nifty, metals, pharma, PSU, 5-year projection. Phew! I'll push you to read the long short report if you ask me for that kind of a time frame projection. But I've already put out a number. So just now, if you saw, so mid caps I've already discussed. So if you're seeing this video, go back. You got your answer. On Nifty, I'll discuss it again. Why did we think there were multiple angles to think any number between 30 and 35,000, which included Fibonacci ratios, size of the last wave, alternate wave count, idea that market doubles every time, bottom to top. So even this is a doubling of the index. This is a doubling of the index. We have had so many corrective phases from where index has doubled. Like even if I take this bottom, I think it's 6,800 and this top is at around 12,000 something. So every phase, every cycle in the Nifty has seen doubling. Just the time has increased or decreased. Sometimes it used to be 1 year, it's gone to 2 years. But we've seen it happen over and over again. So if I go from 15,200 bottom, why not 30,000? Okay, and if I take the equal size of this move, why not 35,000? All that will happen if it's a bull market. If it's not a bull market, nothing will happen. So that's the simple short of it. So then you need to judge, are you or are you not in a bull market? I'm judging we are. Because we are not even breaking the 20-month average. This is important. It's sort of what happened in the last bull market, with the only difference being the last bull market had a deep retracement. I think that's what is catching people off guard, that, oh, this was a 61% retracement in wave 2. Why shouldn't we get one like this here? In Weekend with Indiacharts, I and Chavan have debated this topic over and over again during this phase, where I've explained why it may or may not be true. And eventually it didn't happen. Even being bearish couldn't really get us down to extreme levels. The worst case scenario was, here when you had this correction after December, you could have come all the way down to the lower band, and that could have retested 15,200 or something. But even those bands eventually moved up. So I'm now zooming in and you can see that even though for a month we did close here below the 20-month average, we rebounded again. Here we tried to do it, but we didn't, and we rebounded again. So as long as this is holding, essentially you are in a trend continuation, and now the monthly might give a crossover to the buy side end of July, not now. In end of June, the monthly RMI has given a buy signal on mid cap, small cap, 500, but not the Nifty, Sensex, main indices. So that is going to take time. Maybe next month, by end of July, those signals could come if the market continues to hold up. But the main thing I'm highlighting here, you can have this entire bull market extending on top of the 20-month, and its failure to go below that here is a good sign. So unless that breaks, I will remain in bull market mode. So now that sort of told you what I'll keep looking at, and which is far down. Now if you want a level, some people like to ask this, now when will you turn bearish? The answer is close below 17,640, maybe I'll consider something has gone wrong. But unless that happens, we remain in bull market mode. So how do you find mid and small caps will outperform, large caps will outperform? Relative strength analysis or any other? Yes, relative strength analysis, which I've already explained in this video earlier. Goldium International, no idea. I haven't studied it, can't answer. Can Nifty move up with the correction? Is that healthy? It can be and it can't be. What is health? Basically, if sometimes there are moves where there's under ownership, there's too much liquidity, moves can be very fast. Can we call them healthy or unhealthy? So we can't always, if you just take the history of indices, you don't have in the Nifty, but if you actually go and look at, say, the Sensex, right? Something that a lot of people don't look at. And if I take a Sensex chart really long term, okay, then you look at the previous bull markets. You had these rallies. This is a huge rally. Index went from 900 to 4,500. That's a 4x return. This is pre-Harshad into the reforms done by P.V. Narasimha Rao along with Manmohan Singh, known as, the reform period that started. But a lot of the reforms actually started with Rajiv Gandhi in the late 1980s, where imports duties were being brought down and so on. And then finally, the big reforms came in 1990, and that drove the rest of this move. Now, main point being, what is the retracement here? Okay, what is the retracement here? So what would you do? You call it an unhealthy market and miss a 4x move in the index over 2 years because you never got a retracement? I don't know. So that is why we have wave theory and trend following, various different tools. Why I talk about complete market analysis. Somebody was trying to lecture me yesterday on only looking at charts. I debunk it. I've spent my life learning about everything else so that I can talk about it, whether it's global, macro, and so on. People don't like to hear it because they have their own opinions. Everybody's opinionate. And if it doesn't agree with their opinion, the easiest answer is please don't talk about it. Fine. But I take that opinion in combining what charts are doing along with what they are doing. So if you want to talk bond yields, I can open a bond chart. If you want to talk the dollar, I can open a dollar chart. So we can be preemptive. We can run ahead of what the Fed is thinking and what the markets are thinking about what the Fed is thinking. And we can actually have a view on how things might actually play out. So similarly here, when some trends have retracements, some don't. Okay. You have this which has a almost more than 38% retracement. You have this entire move which has a 50% retracement. But when you have a running move like this, it can keep going on till you have 5 waves, 9 waves, 13. You will get your retracement, but not now. You'll get it after this rally is over. This rally could go much higher before it's over. And that we have to track with the trade setups using classical technicals, which is part of what I say complete market analysis means. Not only Elliott wave theory, but you use trend following, use Bollinger Bands, moving averages, trend lines. You have all your tools together. That doesn't mean I use 100 things. I use like less than a dozen. 6-7 things is all I use. But even those are sufficient to trend follow and to know whether the trend is extending, holding, and what the wave structure is as and when that is happening. So you don't have to obsess with the idea that something is overbought, oversold, not retraced, but understand where it is in the structure and what the market is telling you. So it's very important learning for people. Get that experience. And in a year, how financial even how many financial event is happening and how to radar on it. I wish you could write it in a more clear language that I could understand what the heck is being asked over here. Sorry. Dhiman, I can't understand what you're asking. Okay, how many financial event is happening? I don't know what that means. The Elliott wave counts on M&M on a long-term basis. Sure. Okay, fine. At least it didn't say can I buy M&M, so I can't tell you that. Wave counts, yes, we can share you the wave counts. It's in fact, you said long-term, so let's not even open this. I always have long-term counts marked for various of these things. And sorry. Anyway, what we'll do is we'll do it. I'll take a white chart, makes life easier. Go to a quarterly, makes life even easier. And then when I do that, I just draw something like basic, which is channeling. Few people would have seen, channels touch points so well. Some of my safe charts go away. That is why I couldn't find it. But broadly thinking, I would think this is trying to do something like this. Okay. And so that is that as far as M&M is concerned. There's one concern with this count though. Some of you might already be waiting to ask the question if you've observed it. That possibly there's an overlap between this high and low in terms of calling it 4. We can argue, is it 4 and 5? Is it something else? Is this 1, 2, 1, 2, 3 that is too bullish? So I wouldn't think so. Is it A, B, C, D, E? Okay, maybe, in which case this should end in 3 waves. You can come up with different thoughts, but it does look like the first rally here is an impulse 1, 2, 3, 4, 5 or something. We'll see, but in any case from here it's not over, because even if this is A, B, C, then this is 1, 2, 3, 4, 5. And if it is 5 impulse, then 4 and 5 more. So somewhere between this, either this or this, but we aren't there yet. So we will probably get to the top end of the channel and we can keep deciding where it is. I would like to try and mark this as an impulse more than anything. So I'm going with the 1, 2 and then 1, 2 kind of count, and then continue with, so we've got 3, 4, 3, 4, 5 left before it's over. And that's a long way to go. Still like for mid cap small banks, yes. Silver buying levels, please, for a month. I can't tell you to buy silver, but I can tell you that gold and silver have reached 61. In fact, most commodities have reached 61% retracement. Okay. So if I just open silver, and we are just waiting, we are waiting patiently because we need that signal, right? Bond yields, dollar, we talked about it. And commodities are the ones that are most affected by it, which is why they are not performing, even though equity markets are doing well. So this is a 66% retracement here for silver on this chart of mine. Very similar setup you have even in spot gold. So I'm showing you my saved charts, so they're always in black and white. So if I go to white, you won't be able to see my saved markings. This is also 66%, bounced a bit. Want to see it go above the 20 DMA, want to see that follow up above $1940. And then we can well be on course in third waves or third waves for gold, silver on the way up. That's what I'm waiting to see happen. And so similarly, even in case of, say, base metals, some places like copper, I think recently we have done a near 61% retracement here, 66%. Okay, if I take the entire range, sorry, this has moved somehow for some reason, maybe while I was doing analysis. Yeah, so it has gone below 61, but possibly within 66% or a little more, and bounced back. So this is what has happened, I think, with most commodities that have just done that pullback retracement. We're waiting to see whether 3 develops and the dollar falls. It's keeping us on the edge. US is closed today, won't get any clues till tomorrow. How to learn investing and trading? See, there are 2 options. One is you want to speed it up. You join our mentorship program. Next batch will be on in October, November. Want to do it faster? I have recorded videos on all the topics. The live sessions basically start after November or December, whenever we decide. We haven't decided yet. But if you think you can do video learning, then I've recorded everything in a video series. If you think you can do it yourself, definitely you go to Indiacharts. I have an entire resource list. Okay, because I do believe that you shouldn't just study from YouTube videos, because sometimes the finer aspects of learning can be lost. So you go here, you click on say market analysis, you go to educate yourself, and here there's the ultimate resource list. Okay, so not just that, but YouTube, podcasts, things I listen to and read, and all the books for different topics, from technicals to Elliott to whatever. I've tried to list whatever I've liked over time. Okay. There are Amazon links as well, so you can find it quickly. And so this is what you ought to do. Come here and start your self-learning or join the mentorship. I think those are the 2 options I can give you. Fraud share बाजार मार्केट है. इन्फ्लुएंसर से कैसे बचें? मत बचो. Increase your own intelligence. Jay Sharma. That is the only answer. I mean, bache matlab, as if you are saying, as if somebody is calling you up and making you do something. And I actually blame people themselves. The reason why tipping and the tips industry or the insider industry, we have some inside information for you industry, has grows, is based on people's expectation that they want some special information from inside, and you expect this broker RM who's like an employee of the brokerage to have that inside information to give you. And he probably cooks up something and gives it to you. And the same is with this whole influencer industry. Not all of it. There are a lot of genuine people out there. So, so you need to figure, first of all, get our facts right. We should not be looking for shortcuts. Then definitely there'll be somebody who will sell you a shortcut. But if somebody is telling you about a long cut, then probably you're in the right hands. If somebody is trying to teach you, then you need to educate yourself. So educating yourself, becoming more intelligent yourself is the only answer. You cannot blame anybody else for not taking it in your own hands. What if you make 3 times 1, 2? Then you will make 3 times 3, 4. Because you need to complete, an impulse is 5 waves. But if you do an extension, okay, what you're saying by a 1, 2, 1, 2 is basically it's an extension. It will increase by +4. So it will go to 9 waves. Then 9 can become 13. 13 can become 17. And so when you do 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 5, you'll have ended up at maybe 17 waves or 13 waves. Okay, so you can get extensions. There are a lot of charts that have extensions. You are a better orator than market technician as per me, but some stuff about world market, intermarket theory, post cycle, behold magic works. Thank you. I'll take that as a compliment. I don't see a question there, but thanks a lot. So I'll retweet it. Sorry, your view on gold and silver, I think I've already given out. We are watching that 66% retracement in gold and silver. If it holds, the next major impulse to new highs should unfold, but it's still not started. So we are waiting, fingers crossed. So what Nifty correct at 19,600? Maybe, maybe not. If you ask me, I think we are probably headed to 20 plus now before we get a retracement or pullback. So that is my current view. In current time, I invest 33% of capital for next 2 year period. Can I invest full capital and value wave investment or wait for wave 2 consolidation? See, tough question. So this is a funny part. There's a time to do it when everybody was negative, FIs were short, March, April, great entry points. Now at 19,600, if I tell you and this guy is right, oh, there's a big correction from 19,600 and then I go wrong, then who are you going to blame? Rohit Srivastav. So now you'll need to, I think, go back to the beginning of this video. Somebody asked me, I've explained it using RMI, how we can actually discipline ourselves, something you'll have to learn to do in terms of how to deploy more. On a 3-year basis, I expect going to 35,000 Nifty. Now that definitely means that, I need to be invested. But how do you do it? When do you do it? Should you wait for a pullback? It requires a lot of fine tuning. Like for example, right now I feel some mid caps are showing loss of momentum and there is reason to believe they should pull back, consolidate, and there will be good entry points. So if you have a list of stocks, then you have to watch their setups and wait for them to give you the right entry points. Aise hi nahi chad jana hai. Right? That's about what the learning is. But yes, the bull run is expected to continue. 19,465 aa raha hai ki nahi, already aa chuka, I think almost. 19,170 not break, or even if it break, how does it matter? So I think too much of the question on corrections, but that is more about trade management and monitoring of levels. Overall, like I said, we head towards 20k. There will be small 100-200 point corrections. Hopefully I get one today. I'm waiting. I said that in the morning and it still not happened. So imagine how difficult it is to get a correction nowadays, but it will happen. All of a sudden, these things do happen when you least expect it. So where is the Nifty? It's again turned positive. Intraday it's whipsawing, but when I look at the hourly, okay, I can see this slow little loss of momentum, RMI then sell. But you don't know, sometimes it'll just do so much. This will come up, and you get a consolidation. And then it starts up again. Then you don't even get much. So that is why I cannot put a number on how much will you pull back in a day or two. It's like more to me about discipline and monitoring than really putting a level and a number to everything and getting it perfectly right. So that's more process than numbers. Numbers do give you direction. So overall I can say, it's a bull market. We're going to 20 plus. Now let's learn how to manage within that so that we don't get caught on the wrong side. What a recession in the West and wider global economy have on adverse impact? Naturally, if you have a recession, there'll be an adverse impact. Fact is, there's no recession. GDP growth came out even stronger this quarter for the US, and which is where people are getting it wrong, and the whole shorts are squeezing from a record short position of 440,000 contracts in the US. We are now down to around 208,000 now, 206,000 this weekend, as we discussed in Weekend with Indiacharts. And still long way to go. It's still 206,000 contracts short in S&P futures. So much for recession. Most research guys are saying it will happen only by the first quarter of 2024. So you still got 5 months of thinking about a recession. One sector that will outperform all the rest, only one. Think. I think defense still. But actually I have 2-3 favorites, unfortunately, even though you want one. I just thought of what has probably done very well, but actually in mid, so that's in the large cap. In the mid caps, it's actually manufacturing that has done very well recently. People, electronics manufacturers and so on, the Make in India story. So probably that is the one. If you want mid cap, defense is the one. If you want large cap, ST view on structure of Kotak Bank, please. Okay, structure is a good question rather than what to buy or sell. So let's look at structure. So you already know now what I've done over here. So banks actually went through a full correction, which you can see in Bank Nifty. The RMI went back to zero, full cycle in terms of what I discussed earlier, momentum cycles. You saw that in Bank Nifty's charts, but we didn't see that happen in Nifty. So same is visible here. You have got a good 50-60% retracement in, say, Kotak Bank. So therefore I've marked it as a good wave too. But it's been a slow bank. That doesn't mean doesn't do well. So let me just I'll take a white chart. So on the big picture of Kotak, after the 2020, let's just not go into entire history, but post 2020, we saw one impulse wave here, 1, 2, 3, 4, 5. Okay, see this fourth wave triangle. For those who understand a bit of Elliott, this is a long consolidation. Most of it was looking corrective along this neckline, and now you again have a 1, 2, and you have 3, 4, 5. So this is how we do counting: 1, 2, 3, 4, 5, ABC. It's very simple. Okay. But it's been a slow guy. It's really not someone that's done a lot. But yeah, if it interests you, watch 61% retracement for wave 2 to be complete. That should sort of help you decide how to act around it. And with that, the last question: can we get 2006-7 type rally in 23-24? The answer is yes. That is probably what is happening right now. You can compare it with any period. If you want to compare it with that, you want to compare it with the Y2K implosion where things got into bubble territory. It could be any of those things, but yes, we are in that phase where things get a little outrageous and for a prolonged period of time. So that's something that you should not really want to miss. That's my answer to you. And so a lot of people, because they were asking about how to do these things and that thing, and I've given resources on learning. I've explained the mentorship, but so each thing is based on how you want to do it. You want to self-learn, spend money, but the feedback we've got with the weekend with Indiacharts, it's not just about discussing market kya lagta hai, which is of course there, but we end up discussing a lot of things that people learn from. So a lot of people who listen to WWIC are learning not just about sometimes discussions on position sizing, sometimes the discussions on how to use different indicators, how did we come up with a particular call of what to do, not to do, and so on. So you just keep learning. So learning is an endless process in the markets. Even we learn. I have learned. I've spent a lot of time in the 2010s. In my 40s, putting this whole macro and other thesis together, writing about India's quantitative cycle from 2011 to 2019, and a lot of perspectives. So there's so much to pick up, and why wouldn't you really just join us at what I believe is a complete throwaway pricing that we do, because we wanted it to be a retail platform and for everybody to learn from. So just spending time with WWIC episodes will give you a lot of learning in terms of various things, various topics that keep coming up from time to time. So hopefully you'll all join us there. And till the next AMA that we try to do, thanks for the questions, and keep learning and keep riding the bull market. And yeah, don't forget trying out Strike. I think I'll keep mentioning that till everybody's on board, because it's free for a 50-day period. And we are upgrading all the features. You'll find 2 to 3 times more features in the next 1.5 months. So just join in and keep looking at what additions we keep doing and enjoy them. Thank you.